What's going on, traders? Happy day after Christmas. So, let's see what we got going on. When we last left, I had a buy trade up here and everything went against me. It wound up being a $55 loss. Um, Rounding out that entire session with three wins and two losses. One of the losses was a stop out, and the other was this one. One of the wins I actually chased when I told you don't chase profit. I went ahead and chased the win instead, which of course means I got profit on that win. So it was kind of like chasing profit, but I really wasn't worried about the profit for two reasons. One, this is not a real account, and two, I was actually chasing consistency, not profit. I was chasing the win because I was already in profit, and it was a situation where I could continue on the win streak and put another win under my belt, or I could let it play out and I'd most likely get stopped out, creating another loss. So instead of doing that, I was like, I'm in profit, take the win and run. So that's what I did. That's what I would suggest everybody do on their road to consistency. When you have a chance for a win, big or small, take the profit, take it and run. And in that vein, let's look at the new tool that I'm going to be talking about and using over the next week here. So let's get rid of this trading channel real quick because it's no longer relevant. We busted out of that channel. And if anything, we're starting a new channel between the 100% retracement and the 78.6 retracement lines. These two red lines right here. If anything, we're in a channel there. As you can see, we wicked outside the bottom of the Fibonacci. And again, because it was just a wick, not a full body candle, we're not moving anything, just like the banks and institutions wouldn't move anything for that wick, just like I didn't move it when it wicked over the top back here. It's not enough to move our Fibonacci, and we will still continue to act inside the Fibonacci lines, just like we're doing here. We're finding a little bit of support in the middle between the two Fibonacci lines, the 78.6 and the 100 retracement. We're finding a little support right in the middle there. That's pretty much where I entered the trade. And like I was going to say, let's find out why. So the new tool, or one of the new tools rather, is the IMBA algo. Now, what that allows you to do, you can see this over here in the corner. This is a back test of how the algorithm worked from 8 a.m. June 5th, 2023. It had 22 trades, 18 wins, 4 losses, with a win rate of 81.82%, win streak of 6, and a loss streak of 1. The trading account at that time had $1,030.21 in it, with a profit ratio of 3.7. That's the first reason that I like it. The second reason that I like it is that it literally shows you entry and take profit points and your stop loss. Now, your stop loss doesn't have to be way up here. That's where they have it set. Okay, and they have the entry point set right here, and I saw that, and I waited for a confirmation candle, and I got it. And this green candle right here was actually red, and this is around where I entered, was when it was red. Entered that short position, and I moved my stop loss, or I mean my take profit, down here to just above the algorithm's third take profit level. That's the other reason why I like this. It has 4 take profit levels, and you can set them up how you want as far as what percentage of the profit you want to take when these levels are hit. So let's go inside real quick and look at that. So what we have here, we have the risk. Okay, I'm risking on this particular trade 5% of the account. Right here it's saying the initial deposit was $1,000. It was actually a little bit below that because I lost that last trade. It was like 950 something, and I just didn't adjust that. As you can see here, the start calculate date is, like I said, June 5th, 2023, and it started at 8 a.m. So here we have our take profit levels. I have the first level set up to take 50% profit, the second level set up to take 30% profit, and the last level to take that last remaining 20% profit. And that would complete the trade. It would close you out right here at this 20% because you can't get any more than 100% out of anything, really. So once it hits that, once it comes down here and hits the profit levels, what you want to do when it hits that first 50% profit level, like on the algorithm, because it entered up here, and you can see where we whipped past its first profit level, it put a green check mark in that first box. Okay, and that would have triggered the program taking 50% of your profit off the table. Okay, when it does that, what you would then do is you would move your stop loss from up here down to about right here or a little bit above right here, which is a Fibonacci level. Or you would move it all the way down to your entry point. Either one of those is good. The reason being is because, well, we know they're going to bounce on the Fibonacci lines. And even the algo set the entry and the other points kind of close to Fibonacci lines, not right on top of them, but really close to them and separated almost exactly like Fibonacci lines are separated. So we would still be working off the Fibonacci for entry and exits, even though we're looking for this. We're looking for the price to hit these exit ranges as it goes down. And like I said, as it hit this one, it would have triggered a 50% pull of profit. As it hits the next one, it would have triggered another 30% pull on profit. And then the last one right here, which would be number 3, not number 4, because I erased number 4 down to 0 and left it with 3 take profit levels. So the first one takes out 50 and the other 2 take out 30 and 20 respectively. And that's how we would do it with these two, with this particular indicator. And as I have said before, never use just one indicator. And I did not doing this. Okay, that should have brought up the other indicator there. Where is it? Oh, okay, I have it blanked out. Boom. And this is the other indicator that I used in this particular instance. And it is the EMA difference stochastic indicator. And what we have is, okay, you can see down here when it turned bearish, you have a bright red, then you have pink, then bright red, and right now we're pink again. And if you'll notice, we're pink right when it starts going green, which means basically that the bears are losing control right there. When it's dark red, bears are in full control. They've got the momentum on their side. Everything is all good in their world. Same thing for the bulls on the opposite side. When it's dark green, bulls are in full control. You're probably looking at a run when it's super dark green. And as it starts to go light green, the market is starting to turn bearish or going into consolidation or something of that effect. It's no longer fully in a bull control. So those are the two indicators that I'm using right now to enter the trades that I'm going to be doing for the week. We'll see how they turn out. This is going to be the first one. And I have already passed my 5-minute mark. So I'm going to let you guys go now. I will see you tomorrow. Everybody have a blessed day. This is the Dark Sage signing out, and peace.